You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, the program here on the old Options Insider Radio Network, where we will break down the week that was and indeed still is from a futures options trading and trends and volatility and skew and hot options and hot strikes and crazy trades and all that fun stuff. Mix it all together and you have the delicious cocktail that is TWIFO, This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. Quite a few programs, 15 if you're counting, including many great archived episodes of this fine program, TWIFO, the easiest place to find all of that, of course, the mothership, the flagship, theoptionsinsider.com, or if you just want to mainline the radio, iTunes, TuneIn, Stitcher, so on and so forth. Pretty much every podcast provider out there should have us. If they don't, let us know. We'll make sure it's up there for you. And of course, you can always join us live every Friday, 1:30 p.m. Central via Mixlr, MIXLR. So if you don't have that link or if you grabbed it before, it's the same one as always. Grab it once, bookmark it, follow us in Mixlr. You know whenever we're live. Not just with this program, but Option Block, Vol Views. All the same link. So you grab that link once and you're set. And of course, you can always listen after the fact via the app as well, available in iOS, Android, and the beloved Fire OS. However you listen to us after the fact live, make sure you hit us up. Questions, comments, insights, pearls of wisdom. We love it all. Even some shots at Nick. We'll take those too. Take ad options, Twitter and Stocktwits, or on the website or via email, questions@theoptionsinsider.com. You guys know how to find us. And speaking of my cohort, my partner in crime, let me welcome on Mr. Nick Howard, the founder of Thx Technologies and the creator of a little platform you like to use quite a bit, particularly on this show, Quick Strike. Mr. Nick, welcome back to the program, sir.
Hey, Mark. Good to be here. Happy Friday.
It is a happy one, isn't it?
Yeah. Anytime we're doing a show is a happy time.
Showtime is always happy time. That's what I want to hear you say. Good, well done, sir. And taking your hot seat today, Nick, in the studio. So sitting in the old CME group hot seat is Mr. I've been doing too many shows today already. Miss Sarah Linane, the Options House / E-Trade Senior Futures Specialist.
Hi.
Sarah, welcome to the TWIFO program and welcome to the studio.
Thank you. Thanks for having me. Great to be here. Mark, Nick, hello, and everyone out there, hello. I'm excited to be back in your studio again.
It's been almost a year since you were here. You, of course, are on our previous program, The Long and Short of Futures Options. So this is your first time here on TWIFO. So for all of our new listeners to this program, why don't you go ahead and give our listeners a really quick overview of your background in the space and what the heck the futures specialist at E-Trade actually does.
Well, my background in the industry, I started down at the Board of Trade, primarily in the grain room. I spent about 7 years down there, clerked for a company, then clerked for an independent, and ended up trading on my own. Shortly after leaving there, I went to the retail side of business. So worked for a firm in retail, and then most recently I joined Options House as they became an FCM for futures. I was asked to come over there to help start the FCM business, which we're up and running, and we're really excited about it. And right as soon as we got up and running, E-Trade came over and bought us. They bought us so now I'm E-Trade. I can't keep up, but I'm E-Trade now, and I'm the futures specialist / strategist over there. We're very excited for that, actually. So E-Trade, they have a big equity customer base, and they bought Options House for our derivatives. And, onboarding their customers, we're very excited about, trading on a new platform. And I'm most excited because the equity customers, I think it's an easy transition to go into futures and futures options. While those strategies remain the same, anyone who is trading equity options, it's an easy transfer to futures and futures options. So I'm excited to educate all of our customers on that because I play a big role in education.
So I'd imagine that's a strong vote of confidence for what you guys are doing. They wouldn't have come in and acquired you guys if they thought you were doing something wrong, right?
Exactly.
So that's got to be a nice boost. And I know it's still kind of early days. Not everything has been worked out yet. But how is that transition process going? Like you mentioned, E-Trade primarily on the stock side. You guys bringing that futures expertise. How are those two worlds meshing?
It's doing great. The integration is going well. We're targeted towards the end of the summer to have all of our clients integrated, up and running to trade, stocks, options, futures, the education outlet, and, a new platform. We're really excited about the new platform to onboard everybody to the new platform. A little bit more better look and feel with bells and whistles, web-based platform. So it's been very exciting, and we're all running around trying to hit those targets, and very excited to onboard all of our new clients and integrate our old ones.
Well, we'll get into that in a little bit, I think, but I'd imagine this has got to be fertile ground and fertile times for you guys over there, just from this week alone. How much of the headlines have been dominated by commodities and things that are typically on the futures side of the fence. So I'd imagine a lot of those, traditional E-Trade stock clients are probably more excited, more interested in what you have to offer, what you're bringing to the table than, let's say, maybe 5 years ago, where that was kind of the futures side was kind of considered still the domain of, the crazy cowboys over here in the pits in Chicago, and they didn't want to go there. But now it does seem like it's a much more approachable and probably interesting, particularly today. We have, volatility in the space. The VIX is just seems like it's on its way to zero. So if you wanted something with a little bit of juice, a little bit of volatility, you have to look elsewhere. So I'd imagine, and maybe I'm speaking out of turn, but I'd imagine these are probably good days to be in your side of the business.
Yeah, Mark, you're absolutely right. I mean, the feedback from customers with the integration has been nothing but positive. Everyone's really excited to jump in and have a little bit more opportunity to become active traders and to, have more opportunity to trade futures and their options and a broader market base than just looking at, stocks and maybe being a buy and hold type of trader. Again, we're going to give them the education in order to trade more, maybe even a little bit more speculative, but look at different markets and have their eye on futures markets that trade 24 hours. They don't necessarily have to trade them, but as I, always say to clients, at least have the opportunity to look at these markets. Everything trades 24 hours. The bell doesn't just ring at 8:30 anymore. So we need to have our eye on these markets, when elections come around and all these big events that happen after the 3 o'clock bell ring, there's other people across the world trading, and we now have the opportunity not only to look at those markets, but to also get in there and trade those markets if they'd like as well.
That's probably one of the number one complaints we receive from our traditional equity option audience, which is, well, I want to trade after hours. I want to be able to trade longer. So that's also bringing them over to the futures and the futures option side for this show, because they get, like you said, that 23 half, if not 24-hour day of trading out there, which I think is attractive to a lot of them. So let's dive into it and let's see what's attractive for everybody else out there. Before we even get into the main products, the crude and everything else we're going to break down this week, I saw this interesting list. I think this is sent to us by Stocktwits, and I thought it was interesting because they broke down actually a lot of commodities in this. They broke down, according to them, I haven't verified all this research. I'm assuming it's all right, but it looks pretty. Usually their stuff is pretty good, and they had their 3 best performing and worst performing assets of the year. Nick, did you cheat and look at the notes, or do you want to play the guess 'em game?
I did not look at the notes.
All right, so I'm going to give you a chance to guess the best performing and worst performing assets for the year. And remember, this is across the broad spectrum, so commodities and everything.
I just cheated.
When you
said not look at the notes, I opened up my tab and
I
then
tempted you to the dark side. I'll just read them off then. See, you're killing me. You're killing me here on the show. It's like you've never done the show with me before. So, all right, I'll read them off for our listeners. Sarah, I know, has looked, so we've all been polluted here in the studio. But the 3 best performing assets, again, lean hogs. Nick, we had that listener right in not that long ago asking us about lean hogs. I don't know, Sarah, is this one that comes up on your radar at E-Trade FCM a lot? Because this is number one. I think we should be looking at it more, it sounds like.
It's so funny, Mark, because I cheated, and I looked at the notes, and I saw that this was on the 3 best performing assets of the year. And to me, from the retail side of the business, I thought to myself, gosh, there's really not that many retail traders trading this. We also gear people and all of our clients towards more liquid products. And I'm not, downing lean hogs or platinum, palladium by any means, but it's our job to get everyone into a less risky market where there's a lot of liquidity. To me, lean hogs is a little bit more for the person, hedgers, or a little bit out of the retail spectrum. So from the retail side of the business, no, we don't have a lot of lean hog traders. Now there are, but it's certainly not the first thing on our radar.
Not the first thing they come to you for. Yeah, it's not. Deep and liquid are not 2 things that come to mind. Correct. When I think of lean hogs. But it is funny. We had someone write into us not that long ago about this. In fact, we were using, Nick, if you recall, our infamous hashtag there, hog love, for a while. You remember that? We were talking about the hog love.
Yeah, we did cover it for a while.
Yes, we did. So we have people do write in every now and then. We have a segment we do every now and then, like our surprise product of the week and things. Sometimes these more esoteric products make it in there. Again, not exactly deep and liquid. I'm sure if you pulled it up today, the numbers will still be pretty anemic compared to some of the other ones we're going to talk about, like crude or gold or all these other names we talk about. But still interesting. Number 2, palladium. So lean hogs up 23%. Palladium neck and neck up 22%, and the old standby, the Qs, up 20%. And then the 3 worst performing assets this year. One we don't really talk about a lot on the show either. FCOJ, the old, actually the orange juice here, down 32%, and then sugar down 29%, and last but not least, the much maligned VIX. I don't know if they have the low for today in there. It might even be lower. It might be higher on the list as a result. Down, they say 21% for the year. They have that, I think today's top 5 historic low print of 9.37. Then, that might even be higher on that list, a.k.a. more of a sell-off there. So interesting stuff. This has been a crazy week, a lot of political stuff in the spectrum. We don't get into the political stuff a lot here on this show, but I did see an interesting breakdown. This was also from, I think it was Platts Platts over there. They do a lot of obviously commodity type things, and they were breaking down commodities, which I had never thought to think of it this way before. So far in Trump's term, so January 20th to this is the end of May here, versus the average over the entire lifespan of Obama's 2 terms. And it's kind of interesting. The actual net takeaway from this is that pretty much all, except for steel, all the 10 commodities on this list, so they have Brent, they have gold, they have iron ore, they have a bunch of things, aluminum, all sorts of things on here on this list. They're all below the average prices during Obama's 2 terms, and Brent in particular is $31 below the average, which was it averaged so far in Trump's time about 52. Again, we mostly talk WTI here. They're talking Brent. This is more for an international audience. The average during Obama's term was $31 higher, 83.63. So fascinating stuff. I don't know, what the broader implications of that other than that. It's an interesting takeaway. It kind of struck me as odd. I don't know, Sarah, did this surprise you, or is this kind of what you expected when you think of in your mind of comparing that time versus now from a commodity perspective?
Well, the comparison isn't equal for the amount of time. I mean, obviously, we have a less amount of time that Trump has been in office. But I think, the markets are going to react to Trump and Obama for different reasons. The market in general is up, when the last time that Obama numbers were out, sure, the market was up, and that's for different reasons as to why the market continues to tick up as Trump is in office. We're the raising the rates and less less regulation. So I think to look at it is interesting. It's a cool thing to kind of talk about. However, I just think that the market reacts to both of them for very different reasons. But still, the same market is up for both of them.
Yeah, you're right. It is kind of a bit of an aberrant data point. It's only a few months for Trump, but still an interesting thing. I'm sure, depending on how you lean politically, is how people will interpret that chart. So they'll be either outraged or very excited. We don't get into that stuff here. I just thought it was more interesting just for breaking it down from a net commodity. Let's get into the hot products of the week, and obviously, once again, our old friend crude, aka WTI, was leading a lot of the mind share this week. It was an interesting week. I think it depends on which day you tuned in, what narrative you got from crude, and sometimes even intraday, the narrative was a little bit mixed. We had conflicting reports, seemed like, coming out of the Energy Information Administration. They kind of poured some cold water on all this hope that inventory levels were going to be maybe coming back to normal again. They actually reported a 3.3 million barrel increase in their commercial stockpiles, and then at the same time, we have almost conflicting reports coming out of API saying their crude supply fell about 5 million barrels. So people kind of didn't know what to make of these conflicting things. It gets into a lot of the nitty-gritty, the nuances of the product, exactly how you interpret that. How the market interpreted that over the past week was that net, yet another little sell-off here in crude. Net on the week off about 2 handles, depending on where you're looking here on the term structure for WTI. But we're back in around that mid-40 level, right around the 46 handle again. So all that talk we had before, but will it break through 55 to the upside, and 60 seems to be in the rearview mirror, at least for the time being. So all this sell-off usually means there's a nice bump in vol. This time, because it's been a little frothier, we see vol kind of mixed here. You got a little bit sell-off in the front portion of the curve, a little bit more of a juice, a little bit more bid in the longer-term portion of the curve. So interesting stuff out there from a vol perspective. Before I get into some of the hot strikes and things, Sarah, obviously, crude is probably a big driver for you guys over there at the E-Trade FCM. So what are you seeing? What are retail coming to you en masse asking about this product? And what are they trading over there when they do?
Absolutely. I mean, traders are definitely looking at the OPEC headlines, that hard break on Wednesday. As soon as the 9:30 number came out, I mean, major sell-off. I think everybody on the street got that number wrong. Everybody was surprised. I think that's probably been the most surprised report in the last couple of months. There's been so many things, we're waiting on the Comey and FOMC minutes and things like that. And I think that this OPEC report that came out this past Wednesday with the numbers, I mean, that was definitely, larger than expected, and everyone was really caught off guard. So in the fact of, clients and traders trading crude oil, now you're talking about a more liquid product, much more interest. There's reports that come out on it, weekly. So we absolutely have a lot of traders and a lot of questions, phone calls, and I think that everyone is getting a little bit more educated on how this market works. And when I say that, it's because futures are new to retail traders, so the education has to come around the fact that these reports do come out, and if you're not ready for them, wow, Wednesday certainly took you off guard if you didn't know that a report was coming out.
Especially this week, because you kind of had conflicting reports for a little bit. The sentiment seemed one way for a while, then we had a little bit of a retreat, and then back again. So yeah, it was a little bit confusing if you're new to this. Luckily, a lot of people I'd imagine coming to you are those proverbial E-Trade stock people who are used to at least the earnings report. So they have some knowledge of event risk, and maybe they don't know exactly how it plays out or what exactly events they should be looking for in the crude. Probably a good educational thing. Maybe that should be a good webinar you guys can have right there. Just hey, the big reports, the big numbers that are important in crude and what to watch for. That might be a good starting point actually. Go ahead.
And that's exactly it, because as stock traders are used to earnings, they usually come out before or after market. So a lot of times this major spike or decline in the market isn't right inside your trading day. So I think that's definitely a transition for stock traders to get used to. Is these reports come out midday. We had a grain report today. Maybe we can get into that later, but a lot of times stock traders aren't used to these reports coming out in the middle of the day. They have conference calls afterwards, earnings after the market. So it's something to definitely get adjusted to. With these announcements coming out, you need to decide whether you want to be in the market or be on the sidelines at that moment, because there's definitely volatility coming into the market.
All right, and I neglected to mention at the top of the show again, Sarah is, of course, in our CME hot seat, and you guys can follow along over there, cmegroup.com/TWIFO, this week in futures options, so you can see the exact same reports that Nick and Sarah and I are using right now. In fact, Nick and his team over there added a nice little extra wrinkle for you guys. The reports are all live, so all those links are all clickable now, so if you're listening to the show now, you can go live, click on those links, and they'll be active, I believe. Nick, correct me if I'm wrong, they'll be active through Sunday, I believe. So you get an extra bonus point. You get the weekend to come in and check out these reports. Are always running. Of course, you can do them every day of the week. It's just those links where we click in and get a little bit more detail on some of the option flow and the skew and things. Those are only available to the premium subscribers of the Quick Strike, unless, of course, you tune in during showtime, in which case you get it all absolutely for free. And let's break down the hot strikes, number one with the bullet for this week. Once again, it was the front month leading the charge, a little bit more perhaps bifurcated than it might see. Usually, front month is well over 50% of the volume. This week, just shy of 50%, about 48.5% out there, with the number one strike with the bullet being the front month July 50 calls, with about 48,000 contracts lighting it up. Again, as Sarah alluded, Wednesday the big day, and Wednesday was also the big day for these calls. 19,000 of the 48,000 going up on that day. And a lot of opening paper this week, a fair amount of opening paper on this strike. So some people may be coming in, obviously a lot of back and forth too, but some people coming in and saying, I want to reestablish on this strike, maybe selling some covered calls, maybe in turn coming in and opening and reestablishing. Either way, interesting hot stuff. Do you notice that as well over there, Sarah?
Absolutely, yeah. Anyone can see that on the open interest in the volume, and that's exactly where it's at, is the 50 strike. And, as we all know, these are coming off in, 6 days or so, and the futures will trade a couple days afterward. So, the question there is the futures price going to be driven by the option strike with the most open interest? Are we going to gravitate towards that 50 level? We saw, it pop off the 45 level today. Are we gravitating more towards the 50 level because that's where all the open interest is, and we're nearing expiration here?
So it sounds like you're a subscriber to that, the magnetic power of options around expiration to suck the underlying to those strikes. We hear that a lot on the stock side. Don't hear as much on the future side, but I think there's a lot of interesting stuff there as well. And of course, outside of the 50 calls, it was pretty much 40 the strikes you might expect, 50 and 45, the big round number strikes lighting things up this week. In terms of number two, the 45 puts out there in July, also active, 45,000 contracts. Good chunk of that again on Wednesday, about 12,000 coming in on Wednesday for number two. Number three, the 48s out there in July. So kind of a nice little near the money strip there, 38,000 of those pretty much across the board. Of course, longer term wasn't forgotten as well. We have to go all the way out here into some other products as well that were lighting it up in terms, including longer term out here as well. The DEES 45 puts getting some action, about 10,000 of those trading this week. We got also no 55 calls trading about 1,000 of those. 66 halves out there getting a little bit farther out, about October as well. And even longer term DEES of 2018. The 60 calls, so the crude bulls are not dead, not by a long shot. Someone picking up, trading about 7,000 roughly of those DEES 2018 60 calls over there. Sarah, is this long-term paper, does this surprise you, or is kind of what you pretty much expected out there?
You know, I was looking just at the August. We just talked about the 50 strike that we talked about in July. In August, the most, the open interest in the volume is towards the 52. And then when you go further out, it's higher and higher. And we are coming upon the summer months. So, I mean, this could be just something that, everyone's anticipating that you might see a little bit of a buying opportunity, especially after what came out on Wednesday.
And Nick, I know you've been watching crude a lot this week as well. What's been catching your eye out there from an overall crude perspective, futures, as well as, of course, our old friend, the quick skew?
Yeah, I think the same thing that we have been mentioning for the last several months when we talk about the crude. We look at the overall sort of open interest picture across multiple expirations, and it gives us a pretty good idea where we think the range is going to be. And at the risk of sounding like a broken record, right now the 45 puts across the board are the largest downside put. Well, it's at the money more or less right now, but you got the 45 and the 40 on the downside, and then the 50 strike and the 55 strike on the upside. Difference with the 50 strike is you also have some, you have more puts there than you do calls. So again, like we've watched, our range is pretty well set. We were trading, 47, 48 and a half earlier in the week, and then the EIA number came out, and we took a pretty good hit on that day, and we stayed above 45, right? So there was some defense of that strike, and it just feels and looks, and the news is sort of no news, and it looks like we're just going to sort of move between these ranges, and we never hit. What do we have Matt on a few weeks ago? We never hit that 52 and a half level that he talked about. And I think that what we're going to see here, just based on purely the open interest and the aggregate open interest across the board, is just a trade within the 45 and the 50 range for the time being. Another thing of note that we probably should mention this week, the week 2 option that expired. It already expired, but I enabled it for the show. I put another hour on it to enable it for the show. That had another, what do we got today? Another 13,000 in volume. So that's the weekly's kind of strong again, following up last week's weekly option that was strong into the OPEC meeting. So that's a good sign for the weeklies. They've been doing a lot of push at the CME Group to make sure that people are aware that there is a very finite period that you can hedge from a risk standpoint when you start to get these options that are expiring every week. Sarah mentioned the July contract expiring next Friday, and then there's another one obviously every Friday, but good sign to see the continued volume and range of strikes that traded in that week 2 contract. And we look here and we had, 3 on the call side, 3 or 4 that were over or around 1,000, and a couple on the put side. So, good to see that kind of stuff happening. As far as the vol and the quick skew, looking at the vol, everybody can see whether it's red or green. A little bit higher. I think we had a little bit of a spike on the break, but again, when we don't get through those levels, we don't get through those 45 or 50 levels, we don't get through those, going through 45 is going to give us more vol. Going through 50 might give us a little bit more. I don't even know how much vol we'll get on the upside move. It's going to have to really be significant, but I think we're pretty well bound for the time being. But anything of notice that we might see here is I'm going to go out and look on the quick skew. July, we can't really talk about anymore because it's under 7 days to expiration. But as far as August on out, we see the calls got a little less cheap and the puts got a little less expensive. So, I think that's a function of kind of settling back into a lower part of our range again. I think if we moved up to the 48, 49, we might see that reverse a little bit. But, nothing super exciting from a skew standpoint. We did see it was a big positive change if you look at the pure outright call minus the put on the 25 delta strike. But from an overall, we have a little bit of tilt back, right? We were tilting more towards the put side. Now we're tilting, the ship righted itself a little bit. And I think that had to do with the downside move.
Yeah, a lot of interesting stuff going on here. Before we segue away from crude here, Sarah, any last thoughts? Obviously, this is probably a pretty big product area for you guys over there. Any last nuggets, any pearls of wisdom over there before we move on to one of the other hot products this week?
It definitely is a hot product, certainly for retail clients. I thought it was interesting, Nick, that you mentioned the weeklies, because I agree. The volume is not quite there yet. I always tell people, make sure you check the volume, open interest before trading them, but it really is getting there. I usually steer people towards the monthlies just because it's a little bit less. It's just a better trade, but I'm in favor of the weeklies, and it is nice to see that they're getting a little bit more interest in volume in those.
I've asked just about every guest we've had on the show this same question, so I'll give you a chance, since you brought it up, to answer it as well. This is an interesting one for us, and we've kind of debated a lot on this program. Crude is obviously lighting it up from a volume perspective, as you guys have seen, a lot of other guests have seen. A growing number of retail are flocking into crude, yet they're trading primarily front month. They're not really trading the weeklies. They're growing. We're getting more numbers out of CME that ADV is coming up, but it's still a slow grind to the upside, whereas, in the equities, other products, the weeklies have just been embraced pretty much en masse. Why do you think this a similar audience is a little bit reluctant to trade the weeklies, or do you think there's something else at work there? Maybe it is a different audience, different nature of the product. Why do you think it's been a slow grind to the upside for the weeklies in crude?
From a retail perspective, I think it's just probably a comfort level. I know that there's so many equity products out there that have weeklies now, but the comfort level from old school thinking is the monthlies. And there's so many weeklies offered. Like, for instance, the E-minis, we have Wednesdays now. Everything is out there. So I just, I think it just depends on, what their time frame is, what their trade idea is. But the weeklies can be a little bit more fearful because you have less time. So I think it's just a comfort level, I would say.
And you mentioned the E-mini is kind of the poster child for weeklies. If that product lights it up, if you're not looking at the weeklies out there, you're kind of missing the whole story out there. But still a lot of interesting stuff. Mr. Nick, one last comment on the weeklies or on crude there before we move on, sir.
Yeah, I just think that people are going to have to start looking at the weeklies more from a standpoint of as a short-term future with some limited risk if you're long, just from a premium risk as opposed to just blowout risk. As the liquidity continues to rise, the markets are very tight now in the crude, and on all the products, as Sarah mentioned, have them, indexes being the ones that are probably the most prominent. But even now, the Treasuries added the Wednesday weeklies, so now you have the ability, and I think part of that was obviously to more granular risk control, but also to take advantage of the fact that all of the FOMCs tend to land on the Wednesday. So even this next week with FOMC on the 15th, new Wednesday weeklies are available, and those are trading as well. So I think that if people start looking at, people are comfortable trading futures, they can be comfortable trading long weeklies. Short weeklies, a little bit more scary from my standpoint, just from my experience of short-dated shorts. You got to really be right, or you could be really wrong. But when you start looking at it as like little lottery tickets to maybe play a spike or a hit in the underlying, we start to have these sort of low-risk weekly quote-unquote futures plays.
Speaking of the weekly, it was a hot week for a lot of macro action. Of course, we had the Comey testimony here in the States. That drove a lot of anticipation for the marketplace. Of course, we had the big vote in Britain last night. So a lot of the focus has been on the macro side. And whenever that's the case, usually gold is in the headlines, not too far between. And it was a fairly active week for gold. An interesting one as well. It's kind of breaking down, I guess, depending on how you're looking at it. Now, actually, some people are analyzing it as more of a currency play this week with pricing in, depending on how you're pricing it in sterling or you're pricing it in dollars. surprised gold actually had a little bit of a different week this week because of course the currencies had an interesting week as well. But net here over here in the big COMEX gold, the net futures off about 5 handles, a little bit more, about 10 handles. We go a little bit farther out, right around that 1275 strike right now. So net, bit of a sell-off out there on the week, about 0.6% or so out there. And all this downside means vol actually was, again, kind of a little bit mixed, a little bit up in the front portion of the term structure, a little bit off as you go a little bit farther back. You know, as we said before on this show many times, you know, gold has kind of been one of the more interesting ones to watch from an options volatility perspective, because that volatility skew just ebbs and flows so much on a weekly basis. The calls get bid, the puts get bid, they both get bid, nothing's bid. It moves around a lot more than let's say your traditional equity or index option. So if you're looking at, we want to watch a product that has a lot of evolution from a skew perspective. Gold has been a fun one to watch. Before we get into the option strikes here and the hot options for this week, Sarah, I'd have to go out on a limb and wager a guess that you probably get a lot of, obviously we mentioned you get a lot of inquiries about crude. I'd imagine, you know, the E-minis and the index futures are up there as well. But I gotta guess gold's somewhere up there as well, maybe number 2 or 3, depending on the week in terms of inquiries. Is that correct, or am I completely off base there?
No, you're absolutely correct, Mark. That would definitely be number 3. You know, gold from a macro standpoint is always going to be that safety play, that safety trade. So whenever there's something going on, you're always going to see gold move in the direction in which people are either taking their fear off or putting their fear on. So gold is always, you know, a play that you know, whether or not it was from so long ago that was like the safety trade, it just remains to be that still, whether, you know, it's an institutional trader or a retail trader. So gold is certainly, I would say, the number 3 product, even in a retail world.
A lot of guests on here, and I've noticed this myself as well, that, you know, the gold bugs are a hardcore bunch, and if you dare to disparage gold in any way, shape, or form, they will come at you. Do you see any sort of bias from your clientele as well? Are they mostly, shall we say, on the long gold side, or are they a little bit more mixed? Do you notice anything like that from the clients?
You know, I'd say mixed. It depends. It depends on what the rest of their portfolio looks like, what they're maybe trying to hedge against, what else is, you know, they're doing in the near term future, what the macro standpoint is. So yeah, that's definitely a mixed bag there.
And things that were mixed, there was a lot of mixed trading out here in gold this week. The big action was here pretty much in the front month. The weeklies, the July, the weeklies not really doing a heck of a lot this week, which is, again, kind of surprising given that it was a lot of action this week. You think a weekly would be well suited, but the front month seemed to be where a lot of the action was, about 45% of the overall volume going up out there in the July contract. Open interest up pretty strong as well this week, about 5%, so a good week overall for gold options out here. If you're asking, hey, what was the number one hot strike out there, number one with the bullet, was, as you might imagine, they like these even number strikes, and the 1300 strike once again was the option du jour. The calls out there doing about 9,000 contracts this week. The lion's share actually on Tuesday, nearly 4,000 of those coming in. Pretty much back and forth trading on that strike, net opening, but a lot of back and forth, as you might imagine, on that strike. A lot of people closing, reopening, establishing, so a lot of healthy churn on that strike this week. Followed their number 2, distant number 2 actually. The 1300 is kind of blowing the doors off it. Distant number 2 of the 12 half puts. So a nice little wide risk reversal right around the at the money. The 1275 is about the at the money. So the 1250, 1300 risk reversal lighting it up this week. The 12 half puts doing about 5,500 contracts. Again, the lion's share of that action coming on to, actually lion's share coming in today, actually 2,300 coming in today. So a hot day today, given, not surprising given the fact that we're seeing kind of the after effect of the British vote last night out there as well. Of course, there was some paper trading a little bit farther out as well, as we like to see that a lot. We see that typically with the metals, including out here in the Dees 2017. If 1300 wasn't too rich for your blood, well, we got you covered. The 1400s also trading, about nearly 5,000 of those going up this week out there for Dees of this year. So again, the long-term gold bug striking out there on the 1400s. And if that wasn't enough, all the way out in June of next year, June 2018. Got some gold beers coming in with the 1,000, the par puts, trading nearly 1,000 of those this week as well, about 875. So some weird ones I don't know, Nick, maybe you have a thought on that. I don't know which one's weirder. I think probably the 1,000 puts, just because those are 1,400 calls. We've seen that kind of paper going up before. You don't see a lot of long-term, far out-of-the-money put volume going up out here in gold. That said, Nick, what's your take on what you saw this week in gold, and what was going on out here from a quick skew perspective?
I guess if you want to look at one more oddball trade, you can look at the December of 2018, and you see the 2225.
Oh, yes, you're right. I did notice that. Only 31, so it kind of fell off my radar. Let's give that our crazy trade of the week. Yeah, let's go for that.
That might be a fat finger on that
2225. Dees 2018 call. I like that. That's a good one.
Those are, I don't know. I have to look and see what the price is on those. Anything interesting? I think, you could take a look at the July again and sort of look when the 1500s traded in the calls. It traded Monday when it just, I would be curious to see this timestamp on that to see if it, as the run up occurred, if somebody was saying, because there was a lot of talk on the internet and in the articles about going through 1300 and that type of thing. So you tend to see sort of these odd strikes trade when people start seeing some speculation in the press or just in the prognosticators, what they're throwing out there for people to chew on. As far as anything, nothing really interesting. Volatility is pretty flat. We're not quite as low as we've been, although we're still really low in general. And as far as, you talked earlier in the conversation how, we see the skew in the individual vol curves whipping around quite a bit. And we didn't see anything really happen this week. If you look, they're generally sort of on the upside and maybe a little bit cheaper on the call side, but I would almost call it insignificant and not worth noting. So no change in the shape of the vol curve, no real interest here. I'm going to take a look at what happened intra week here on this volatility. I don't think we had a little bit of a jump this week, but really not all that much when it's all said and done. And I imagine we're going to be overall we're down still or flat. So nothing too interesting. I mean, outside of the, like you mentioned, good open interest, 5% increase, which is always good to see that, you want to see your products have increasing open interest and just to sort of, close the book on the weekly there, no action there. And I think that goes back to there's not enough liquidity in this one. And I just think this is kind of a different play. I think this is sort of, when you're running scared, you're running and packing everything you possibly can, and you're not thinking about the short term, you're thinking about the long term. So I think that's when these options might have a tough time catching on as weeklies, but at least that's what it looks like from here.
Yeah, the weeklies are getting no love out there as well, which is interesting. Speaking of what was getting some love, though, and certainly getting a lot of interest this week, people ask us every now and then. In fact, I think we had a question that might have been last week. I think we touched on it. Hey, a little bit more. Can you give a little bit more FX love? So we're going to do that for you right now. FX was obviously on the agenda a lot this week. Of course, the macro stuff with Comey implicating that, but more saliently last night with the election out there in Britain, how that will impact Britain's withdrawal from the Eurozone and everything else. So a lot of impact on the FX space. So let's start, I guess, where the impact is probably the most severe, on the pound, good old pound dollar, lighting it up out there. Net on the week, the futures were off a little over 1% out there. So probably not a surprise given all the news we saw there. Vol also coming off a little bit as well, which again, probably not a big a surprise. It's your traditional event risk playing off, vol creeping up going into the event, and then once it happens, unless it's a huge shock, then you're going to see the vol come in fairly aggressively. Sarah, we don't get a chance to really discuss FX too much on this program. I'm curious for your perspective over there at E-Trade. Is this what are your thoughts on FX? Is this a growing area for retail? Are they interested in it? Is it still a lit's bit esoteric for them? Or what's your take?
I mean, just like any trader, traders go where the action is. So, sure, that might not be an everyday play for traders, but when we have something like the election, coming down, people are looking at it. Traders are looking at it. What I found kind of interesting, we talked about, 24-hour access to futures. They barely close. They trade almost, through the night. And we had that, it basically gapped open. You don't really see that anymore, where it's a big risk with that gap. Obviously, everyone expected it to do something, and especially with the outcome of it. But again, traders are traders. They go where the action is. So FX, became something that everyone was looking at.
Yeah, clearly they were, because the numbers were fairly strong this week in terms of overall volume. Open interest up a whopping 35.5% this week, Sarah. I don't know if that says the previous weeks were kind of light, or this week was super heavy. Maybe probably a combination of both, but either way, open interest blowing it up this week, up 35.5% out here in the pound US dollar out there. And the number one hot strike, again, coming in the front month, about 40% of the paper going up out there. Not a surprise given the near-term focus of the events this week. And the number one hot strike was actually the hot option out here, the 1.24. I love the strikes out here. 1.24 put lighting it up. And pretty much you can see, I think maybe this chart right here is kind of a emblematic of the week. Not much action on Monday, Tuesday, Wednesday, or Thursday. Today, whopping almost 4,000 contracts, which is the number one with a bullet. So yeah, big paper coming in today. Again, hot on the heels of the big vote out there in Britain. Total 4,000 even. Don't see that very often out here on a strike. So pretty much the lion's share, 98% of that coming in today. I got a feeling it's going to play out on a lot of the strikes we talk about, including the 1.25 puts as well. About 2,700 of those. That actually was a little bit more even, including about 800 today and about double that, 1,600 back on Tuesday. So a little bit of weird dichotomy of paper out there. Also, not to be forgotten out here, the weeklies doing a little bit of action, a little bit of love out here as well with that front weekly contract 1.25 puts, also lighting it up to the tune of about 3,600 contracts. And surprisingly, a lot of that coming in yesterday, not as much today. You think there'd be a little bit of action out there today as well. So a nice kind of smattering of activity out here, Mr. Nick, which is kind of interesting in and of itself. I got weeklies on the brain, clearly. We've been talking weeklies all episode here. But what's catching your eye out here? From weeklies getting some love out here. What's also going on with the quick skew? What was catching your eye out here in the old pound USD today, sir?
Yeah, so I think one of the most interesting things, if you're looking at the This Week in Options report, you're going to see that the vols are all red, that they're all off for the week. But if you hover over a particular change, you can see what today's change was. So if we go and look at like the 14-day option or the 21-day option, the weeklies, they're down for the week, a couple vol, but a lot of that is 3% down today, 4% down today, 4.5%. So there was obviously some run up in the vol going into the election, as you would expect, event vol getting bid up a little bit on the shorter dated stuff. And then it definitely came out after, it was sort of a foregone conclusion. And there was a lot of mixed stuff overnight in terms of whether May was going to lose majority or not and that kind of thing, whether she would resign. So I think some of the vol came out when she said she's staying in place and going to try to work with the split government for the time being. Anything else of note here? We see that throughout the course of the week, and these are we'll see this change with settlement today, but puts were definitely bid and the calls were definitely offered going into this election. And the funny thing is, you see it really very a big change for the week in the 7 obviously, but the 14, the 21, and the 28-day option. But if you go further out on the curve, when you start getting to the 2-month, et cetera, you're going to see there wasn't that much of a change. So people obviously weren't making big bets long term on the downside, but they were definitely making big bet short term on the vol. And you know what? It's as you would expect, but it also goes to show you that there's plenty of vehicles here to take advantage of the event vol risk that is out there. And we saw it specifically here in this. There wasn't a perfect expiration here in terms of expiring today, unless I missed one, unless I think one might have gone off today. I'm not sure. I'll have to roll that on and take a look and see what I see. But yeah, tilting the curve this week towards the puts with the expectation of the election, and it's great to look at the quick skew numbers and see. You can visualize that tilt just by looking at the two numbers, and it's happening. And it'll probably come back once things settle in for Monday. So it'll be fun to take a look at it next week.
Speaking of fun, I think our listeners want to have a little bit of fun with us too. So let's get into some of their futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Time for your feedback. Like the man said, the portion of the show where you guys take the reins. Questions, comments, insights, pearls of wisdom, all that fun stuff. We welcome it all. We actually like to ask you guys questions every now and then, too. Like we did just before the show. We asked you, hey, VIX seems to be giving up the ghost here. So with that being the case, which products are you hoping will provide some new sources of volatility for your options trading? We gave you 4 choices. We said, could it be crude? Would it be metals? We didn't specify, so you could gold, silver, whatever you want to trade within that metals bracket, just metals. Or FX, again, we weren't particular. It could be pound dollar, euro dollar, whatever the heck floats your boat, yen. Or could it be going into this, getting away from the broad indices and getting into more of like the individual equity names, like a Tesla or something like that may have a little bit of vol there. Sarah, you're our guest. I'll let you chime in first. What would your vote be if you have one? And what do you think is winning our poll?
Well, I'm going to kind of go off the 4 that you gave us to choose.
Look at you, going off the reservation already. First time here on the new show and already just letting it fly. I like it.
Well, it's going to go with number 4 a little bit, and I'm going to say like the equity index futures. So the S&P, it just seems like we need more volatility in there. Everything is shrugged off. We just keep ticking up. There's, I'd like to see a little bit more, pullbacks, and it doesn't matter what the market comes out with. It's just, we take a quick breather and boom. I mean, we made new highs today on the S&P. It's in their yearly highs. So that is going to be my answer there with, so I guess in unison, it would create, more for equity products as individuals, but the equity themselves, equity index futures.
So it sounds like you're leaning more that vol is just so anemic, it has to turn around and you want to be in the big S&P or index futures when that happens kind of thing.
Exactly.
All right, interesting. So going off the script a little bit, I'll allow it. It's your first time in the studio, at least for this show. So we'll let you go off the script. Mr. Nick, you have to stick to the script because you've done the show before. So what is your pick of crude, metals, FX, or maybe the individual stuff there?
Well, I would say I hope that there's some action in the equities. I won't in the equity indexes because I'd like to see us get a correction in the market personally, but we'll see what happens there. But I'm going to go out and say, there's so much sort of inner turmoil amongst the countries and the parts of the world. I'm going to go with the FX and say that we're going to see some stuff there. I think we're going to see more little short-term event risk that comes into play, and then we'll see a lot more action there as well. Now, that FX trading all the time, obviously, but maybe we'll see a little bit more action in the option volatility as these as it becomes a little bit better and more well-defined little event volatility events.
Yeah, so far our listeners they're kind of going the way Sarah was going, but sticking to the script this time. They're saying the individual equities, they're saying 37% so far in the lead. Early voting, still got a few hours left in this poll if you want to go change it up for yourself. 37% leading the charge with individual equities. Crude number 2, about 27%, and then a tie for number 3 with metals and FX both getting about 18%. So some of the two big movers of the week, the metals and FX, not getting a lot of love, which is kind of interesting. Again, you got a few hours left if you want to make your voices heard on that. Speaking of making your voices heard, we got good old your buddy Production One here, Nick, chiming in. We read his question last week. He's thanking us, saying, "Hey, that was a blast. Thanks, Nick and Mark, for the Bitcoin, blockchain, and bacon love." Yes, we did that last week. Try the MVP burger, easy for me to say, at the Rio Sportsbook in Vegas. I don't know what he's saying there. Maybe that has a lot of bacon on it, and you could buy it with Bitcoin. Is that the thing, Nick?
I'm assuming it has bacon on it. The Bitcoin part, I'm not exactly.
Well, I'm just trying to tie it into what we were talking about. So he suggested it for us. So I'm assuming you must be able to buy it with Bitcoin.
Well, you can bring home the bacon, right? Which is sort of a form of Bitcoin, I would imagine. So there you go. I'm going to leave it at that.
I like it. We'll leave it at that. I like that. We got this one. Actually, this one's up your alley here, Sarah. So it's a good thing you're in studio for this one. This comes from John Morgan. He wants to know, are futures options, I love these abbreviations, are futures options priced the same as regular options from a commission standpoint? Is it the same ticket charge plus price per contract, or are they priced differently? Also, what about my favorite question, I guess he's saying, can I close out shorts below a dime for free? That's a question I do ask a lot of the brokers on here. Let's start off with one thing at a time. Sarah, you mostly handle the futures, but I'm sure you're familiar with the futures options pricing as well. What do you have to say to our friend here, Mr. Morgan? Is it the same? How does it break down from a fee standpoint? And then we can get to the second part of his question.
Yeah, I actually deal with all those products, so this is right up my alley. I can answer that question on behalf of E-Trade, of course. I think that most brokerage firms deal this way, but again, my answer is on behalf of E-Trade. So futures options are not priced like equity options. There is no ticket charge. You just have your regular future commission per side, and then a little bit, obviously, there's our exchange fees that are associated with that. The exchange fees vary per product. So that's from the exchange standpoint. There is no ticket charge on futures, so that's definitely different. And while, John Morgan, I believe it is, while John, you love this question, I love this question as well. Can I buy back? Is it the dime buyback program? I am in favor of that. However, that has not yet been established in the futures world. So, we can both cross our fingers and hope that maybe the futures world catches on to that, because I'm a big believer in taking off risk and letting people do it for free, as we say, commission-wise. So, look for that in the near future. But right now, on behalf of E-Trade, we do not do the dime buyback program, just on the equity side, not on the future side.
I'm hoping to get there. That is the one question I ask all the brokers who come on the network. He must obviously listen to some shows, John. Because you're right. That is just pretty much risk that's on the table. And we like to incent people to take that risk off whenever possible. I'm sure once you guys are finished with all of the getting all of the other big picture things finished in the merger and acquisition first, I think that other stuff will come down the road. But it sounds like you get it. John gets it. It's a good thing, particularly in this day and age. We don't want any needless risk out there on the books. We got time here for more. We got more Bitcoin love, Nick, this week, and everyone's hitting us up on the Bitcoin. This comes from Elviz. He links to an article about Bitcoin drives to a new high, but is it headed for a crash? This came out from the Journal, I believe, and he says, "My kingdom for some Bitcoin puts right now." I hear you. A lot of people are hitting us up with similar commentary. This is kind of the issue with having a product like this that's kind of unregulated, kind of lives in the Wild West. You don't have a deep, liquid, listed marketplace that you could go to trade things like listed options on it. I know we talked about before, CME's got some patents. They're trying to change that, list some products. They're going to use the blockchain to list things like gold. So it is coming. It's coming down the road, but it's not going to be here anytime soon. So at least for the time being, yeah, you're kind of stuck in the Bitcoin world with kind of the old longer go to cash kind of thing. Maybe these days, maybe you want to lean towards the latter. I don't know. I guess it depends how comfortable you are. I don't know, Sarah, obviously this isn't really a world of the listed products yet, but you got a lot of people hitting you up with inquiries about this, saying, hey, when are we going to have something like, it's kind of hard not to. The thing keeps shooting to new record highs every day. Someone's going to hit you up about it eventually, right?
Right, yeah. Hitting us up about it. I don't know. While it is exciting, or I find it exciting, Mark, you basically took the words out of my mouth. There's no regulation behind it. Sure, you can make the money or bring home the bacon, as someone said earlier. But it's just, it really is. I can't reiterate it again, Mark. You just said it. It's like the wild, wild west. There's no options on it. I don't expect any more volatility to come into it. There's little volatility. Should it tick down? Yes, absolutely. Should it pull back? Absolutely. But who knows? This is such an unregulated, and new, I don't even know if I want to call it a product out there, an internet currency that I really try and stay on the sidelines on that one. And again, from a retail standpoint, we don't have anything to do with it. So my opinion is, sure, it's exciting to talk about, but other than that, that's about where I stand.
Yeah, I hear you. You know, it's interesting. The same article, if you hear people who write to us saying, hey, where's all the vol? This same article from the Journal had a great graph. If you're looking for some volatility, they say Bitcoin has suffered 35 bear markets. These are short term. These are only about a week, but still, since 2010. Here are the sharpest falls, and the biggest had a 70% drop back in April of 2003. I think it might have been that whole Mt. Gox fiasco where that caused a lot of problems. But there's been multiple 60, 50-odd% drops over the last, since 2010. So I don't know if that's a good thing for you if you want some volatility, or if it's more of a confusing, terrifying thing, because it is indeed, like you said, Sarah, or I said, the kind of like the Wild West out there. But yeah, so maybe we'll put that chart in the show notes. You guys can make of it what you will. Any last thoughts here, Sarah?
I don't know why I just thought about this, but it's, everyone's amped up and talking about it. It almost reminds me of David Ross on Dancing with the Stars. Somehow David Ross ended up winning, which I love David Ross, but was he the best one on the show? No. But if he had a bad dance, didn't matter. Everyone just kept voting for him. So while Bitcoin has withstood some market pullbacks, it's just because everyone is just throwing it, just talking about it and throwing their money towards it.
That's why we bring you in, Sarah, for these pressing analogies that you make that Nick and I certainly would not think of. So you're already adding to the stable. We like it. Unfortunately, that music means we've come to the end of another. This was a fun one, a fun sojourn. We touched on gold, touched on crude, touched on FX, got into all things Bitcoin. Can't seem to escape it this week. You guys keep asking us about it. So every week, someone's got to ask us about Bitcoin. We asked you where do you think the vol will be, some surprising interests or issues and some suggestions there. Got into some commissions. Also, it's been just a broad array of topics we covered this week. That said, Sarah, as our guest, you get pride of place. You guys are obviously working on a lot of cool stuff over there on the E-Trade FCM. Why don't you leave our listeners with a little bit of a hint, a little bit of a tease of what they can expect from you guys in the near future?
In the near future, I think everyone should expect, our new platform to come out, and even more excitingly, we're really, really working hard on our mobile. Everybody wants to trade mobile out there. Us, whatever age group you're at, you have your phone in your hand at all times. So our mobile device platform, we're revamping it. We're coming out with all new stuff. So get ready for that. And, everyone is mobile trading. It seems crazy now, but it's really where it's at, whether you're a millennial or a baby boomer.
Well, that's the device they have with them, right? So most of these people have day jobs. They can't be like us sitting at screens all day, so they need to have a nice, fully functioning platform. And particularly for the futures, that's something you could do with a little more of the binary nature of the product, yes, no. You can kind of squeeze that into a mobile platform. You don't need the huge array of options chains that you do for the options side, so it makes it a little bit easier. It's good stuff. Check them out over there at E-Trade, or shoot Sarah an email. I'm sure she'll be happy to answer all your commission questions or everything else you guys may have, all the crazy questions I'm sure you guys have. And last but not least, Mr. Nick, you guys are always working on cool things over there at Quick Strikes. What do you have coming down the pike for us this week, sir?
Let's see. I think I don't think we have anything good coming out this week. We pushed something off. We're going to wait maybe till the end of the quarter, but we're always trying to do some enhancements or letting you dive a little bit more deeply into the reports so you can see where that data is coming from. Only thing I mentioned this week is that keep in mind that FOMC meeting is next week, and you have some new Wednesday weekly options from the CME group, the WY contracts that are available to trade that will expire after that meeting is over. So I think it's something to look at if you have any kind of idea or thoughts on what's going to happen with the Fed this week.
Thank you for that, Mr. Nick. And check out his handiwork over there, cmegroup.com/TWIFO. You can see all these great reports we have available for you pretty much all week long. So even if you've listened to the show next Tuesday, let's say on the podcast, and you want to check back in, you can do all of that fun stuff, cmegroup.com/TWIFO. And while you're over there, check out their institute over there as well. A lot of great educational stuff. So you guys are always hitting us up with questions about how these options products work. They can help you do that in a lot more detail. And on behalf of Sarah and Nick, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, for joining us live. We love you guys too. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.